the UK, the deadline was January of 2018 for the CMA9 banks to have APIs. 50% of those banks missed the deadline. After they came live, it was a full year after that until data APIs were stable. It was a full 18 months until payment APIs were stable. But now there's 400 million data transactions, 400,000 payment transactions in the UK per month. So I'd say that's a model that the rest of the Europe is going to follow. Poland then had the second deadline, and Poland is now the most available and the most stable second country. And then we do also measure the availability of APIs in all the other countries. Germany, the Netherlands, Sweden is probably next. But again, if you look at the deadline for those banks was only 8 months ago. And if you apply the experience in the UK over that, half of them missed the deadline. We did a study as of September deadline, only 15% of the banks were fully compliant in production at that point in time. But across the board, what we're seeing right now is really from the merchant redeeming to the bank responding is an 87% success rate. And when you measure that end to end, it's a little bit lower. But my point, Chris, is sure there's still some difficulties in the networks outside of UK and Poland, but banks aren't slowing down their production of APIs. They are improving and they are stabilizing. They are being rigorously tested. And so I believe it's just a matter of time, like in the UK, that it will become a viable alternative network. So the banks have not slowed down their complying to the regulation. And they continue to produce their APIs. Had this happened 6 months earlier, we might be in a different situation. But all the banks were live, and now they're working out on testing them. So we do see APIs are live and operational. Volume is starting to happen. What I do see starting to slow down is many of the banks were looking at the commercial APIs. So how do we go beyond the bare minimum of compliance? How do we look at enabling more sophisticated payments like variable recurring payments, subscription payments, sweeps, installments? I have noticed a bit of a slowdown of banks moving forward on that project. But interestingly, so we have 2 banks that we enable them to take a PISP offering to market. So that we basically white label token end-to-end to offer a new capability to their corporates. And both of those banks had to re-justify the project in this environment. And both of those banks re-justified it as strategic at this point in time. So kind of tells you that as to comply, they're sticking with it. To create a new offensive proposition, they're staying with it. To move beyond the bare minimum capabilities of the compliance, I've seen a little bit of slowdown on.